Good morning, and we are counting down to the non-farm payroll report due out only in minutes. I am Kenny Polcari, your host of the party, and today is July 8th, 2022, and happy Friday. And what's going on? What do you need to know to get ready for the day and for the weekend? So here's what it is yesterday, right? Stocks rose, right? Investors are betting that the Fed is going to blink. Yet, Fed Governor Waller, along with St. Louis President Jimmy Bullard, say, don't go betting the ranch. Oil rebounding after the beating it took earlier in the week, and the non-farm payroll report is due out today. But in my opinion, the CPI and PPI are next week, and they are more important at this moment in time. And what are we having for dinner? Well, we're going to have the linguine with arugula, pesto, and toasted garlic bread. So delicious. So easy to make. Look, it was a beautiful day in the neighborhood yesterday, right? Stocks rose. The Dow gaining 345 points or 1.1%. The S&P up 57, 1.5%. The Nasdaq gaining 260 points or 2.3%. The Russell adding 42 or 2.4%, while the transports rose by 260 points or nearly 2%. Every sector except utilities participating. Energy, the XLE gaining 3.6%, was the clear leader after getting absolutely crushed earlier in the week. Down 11% on Tuesday oil, right? For what I think was a huge dislocation, a huge pricing dislocation brought on by a spike in worries over the depth and severity of the coming recession. Yesterday, ExxonMobil, Chevron, and Occidental Petroleum all up more than 3.5%, while coal and natural gas stocks, BQ and CRK, up more than 8.5%. Consumer discretionary, XLY gaining 2.6%. Tech, XLK gaining 2%. Communications, XLC up 1.6%. Financials up 1.5%. Industrials up 1.2%. Consumer staples, healthcare, and basic materials and real estate all adding less than 1%. And as noted, utilities, the XLU lost 0.1%. Not a big deal, but just under a little bit of pressure as stocks rally. Samsung reporting strong earnings, and that sent the semiconductor names higher. The SOX ETF, which has suffered this year, down 34%, rose by nearly 5%, taking names like NVIDIA up 4.8%, Intel up 3%, Broadcom up 3.3%, Qualcomm up 5.8%, AMD up 5.2%. The growth trade, SPYG, rising by 2%, leaving it still down 24% on the year, while the value trade, SPYV, gained 1%, leaving it down just 10% in the year. Economic data yesterday revealed that initial jobless claims rose, and what I think is insignificant, right? It went to 235,000 versus last month's 231,000. Yet, the media wasted no time in suggesting that the unemployment benefits rise. It must mean that growth in the labor market is slowing, which then means the Fed may pause or blink, which I think is a premature reaction. Okay, let's not get crazy. Initial jobless claims are down significantly. Last year at this time, they were 360,000 jobs. 2 years ago, they were 1.3 million. So if you're going to say that a rise of 4,000 jobs suggests a slowing of the labor market, go for it. I'm not in that camp. But the headline caused the algos to go into buy mode. And when you have a market that's a bit anxious and a bit of an oversold position, short term, with many asset managers on vacation, you can get these exaggerated reactions. Now, while most people expect the data to weaken and the economy to slow as the Fed raises rates, we're not anywhere near that yet, right? It's coming. We're just not there yet. Okay, so now we ask ourselves, the recession, is it here yet or isn't it? The 10-year decline, the 10-year treasuries decline in price, causing yields to pierce 3.007%. Again, while the 2-year treasury note rose to 3.039%, in another clear sign that a recession is coming. Note the inverted yield curve, right? Remember, when the yield curve inverts for more than a day, history tells us that a recession is at least 16 months away, which puts us well into 2023. Okay, but the Atlanta Fed survey is telling us that we're already in a recession now because we've got 2 consecutive quarters of negative GDP growth. So I got to ask the question, which is it? Right? Are we in one or aren't we? Now, based on what we're hearing out of the Fed mouthpieces, we're not there yet. Yesterday, Fed Governor Chris Waller downplayed or rather outright dismissed the recession story, calling for another 75 basis point rate hike in July, followed by a 50 basis point rate hike in September. fellow Fed President Jimmy Bullard, St. Louis, right, along with a handful of others, reiterated that call and the same move and suggests that the thinking behind the Iron Curtain is that inflation is not peaking, nor has it peaked. And they are concerned. In fact, the FOMC minutes that were released on Wednesday also support that narrative. If you read them, if you heard about them, the narrative does suggest that there is some concern going on in D.C. Oil rebounded strongly, trading up to $104.50 a barrel. The dollar index continues to inch a little bit higher, ending the day at 107.30. But in the end, it was a quiet day. Overall, it was a relatively quiet day as the market awaits economic data. Look, we're in the dog days of summer. I talked about this. The non-farm payroll report that's due out today is expected to show that we restored another 270,000 jobs, leaving the unemployment rate at 3.6%, average hourly earnings up 5% year over year, and up 0.3% month over month. Like I said yesterday, this report always was the report to watch, but for now, I don't think so much. No one is expecting today's report to surprise in either direction, but I guess you could say that if the report is significantly weaker, that would further support the recession story and give the Fed some cover. But if it's significantly stronger, that's going to support the non-recession story, causing the Fed to reiterate their stance on the pace of coming rate increases. In any event, I am not putting too much stock in today's economic report, but I am paying very close attention to next week's CPI and PPI report. We've talked about this because those two data points speak directly to the pace and rate of inflation, and that then will speak directly to what the Fed's next move will be. I think we all agree 75 basis points is where it's coming. But now, the CPI is expected to be up again, coming in at up 1.1% month over month and up 8.8% year over year versus last month's increase of 1% and 8.6% respectively. PPI is estimated to be up 0.8 month over month and 10.4% year over year, which would be down slightly from last month's 10.8. Now, these two are both coming out 2 weeks ahead of the next Fed meeting. So there's going to be plenty of time to discuss, dissect, and digest the data, allowing the Fed to change their narrative if they think it needs to change. So pay attention to what the big banks say post the release of the data, because you know that the Fed uses them to take the temperature of the investor community, right? They put out different thoughts to see how markets react and how investors react. This morning, U.S. futures are down. No, they're up. No, they're down again. The Dow down 65 points. The S&P's off 13. The Nasdaq lower by 58. The Russell off by 5. Oil's down 50 cents. And the 10-year Treasury prices are up, sending yields back below 3%. European stocks are lower, with all the major markets across the zone off about 0.25%. The focus for them will also be today's U.S. non-farm payroll report. And guess what? The NFP just came out, and we added 372,000 jobs in June. That's much stronger than what it was expected to do. I'm just seeing the headline come across now. So that is much stronger, and that's going to feed into the argument that the recession is not here, the economy is not slowing down because we added 100,000 more jobs than what was expected. All right, so you see pressure still on the futures have turned still lower. They remain lower and turning lower. But I'm just seeing the headline now as I'm talking, so I haven't had a chance to really digest it. But know that the unemployment rate stayed at 3.6%, but we did create 100,000 more jobs, or at least the report says we did that based on what we were expecting. Okay, so back to this. The S&P closed at 3902 last night, up 57 points, leaving it solidly in the 3,600, 4,000 trading range where we've been. And while it feels good, I think we're going to test lower as we move through earnings report, right? It starts next week. And if we start to see margin pressure from a lot of these companies, that's going to cause investors to back off. So listen to the guidance. Listen to what the C-suite has to say about what the futures look like. Look, Treasury yield's now up at 3.04%. That was up from just below 3% when I started this broadcast. Look, Fed fund futures are pricing in a rate cut in 2023, something I do not see. JJ's told us that 2% is his inflation target. Now, he said that before, and he completely ignored it. So what's it really? Is it 4%? Is it 5%? Until it's clear what it is, and until it's clear that the trend has changed and inflation is dying, I do not see any rate cuts. I mean, there's a 6.8% difference between inflation and interest rates right now. So in my opinion, the Fed still has work to do. Recall that 40 years ago when we were in the same situation, a lot of you weren't even born yet, The Fed jammed interest rates well above the rate of inflation in order to arrest it. So if that's the case, strap in because we got a ways to go. Look, stay focused. This is not the time to get rattled. Continue to put money away in your tax advantage accounts. Keep it in cash if that makes you sleep at night and that makes you a little bit more patient is okay. Right? But remember, you want to be able to take advantage when you want to be able to take advantage. So in my mind, I would continue to invest the money in key sectors that you think are going to weather the storm. But that's another conversation. Feel free to call me. Okay, what do we have for dinner tonight? Linguine with arugula pesto, which is really good with some toasted garlic bread, right? Now, it's arugula, right? It's a twist on the old classic, right? Arugula's got a little bit of a peppery taste, so that's what makes it different. But it's actually really good. So you want to start the same way you would make regular basil pesto. You want to rinse the arugula, pat it dry with paper towels, let it sit for a minute. You want to heat up a saute pan and toast the pignoli nuts just a little bit. Maybe 4 minutes or so, that's it. Now set them aside. Now in a food processor, you want to add the arugula, you want to add some garlic, you want to add a little bit of salt. You don't have to put pepper because the arugula is a little bit peppery. You want to add olive oil. Puree it. Right? Don't add so much olive oil, but don't be afraid to add some because it's not going to go to waste, right? Once it's pureed, add a couple of handfuls of the grated Parmigiana cheese, blend it some more. That's it, you're done. Taste it. You can adjust the seasoning if you want. Just put it aside, put it in a bowl, just cover it with saran wrap, ready to use in the pasta when the pasta's done. Now, you're going to bring a pot of salted water to a rolling boil. You're going to add the linguine. You can use any type of pasta you want, but spaghetti linguine, something long, really looks good, works well with this dish. You want to cook the pasta 8 minutes or so until it's al dente. Don't make it mush. Strain the pasta, always reserving a mug full of the pasta water. Return the pasta to the pot, add a little bit of the water back just to moisten it again. Toss it around, let it suck up the water. Do not leave a puddle on the bottom of the pan. Now add in, 4 or 5 tablespoons of the arugula pesto. Mix it just so the pasta is kind of coated in the pesto, and then serve it in warm bowls. Take it with the tongs and lift it up, and then make it pretty in the bowl. And then add another tablespoon or 2 of the pesto right on top. Have plenty of fresh grated Parmigiana cheese on the table for your guests. And then on the side, you're going to get a nice loaf of Italian bread to make toasted garlic bread, right, to serve alongside this very classic, traditional Italian meal. And with this, what would I drink? You could drink red or white. If you drink red, I wouldn't drink a heavy red. I'd drink like a Chianti, something a little bit lighter, maybe a Pinot Noir. But you know me, I'm going for the Pinot Grigio Santa Margherita because nice and chilled white wine with this dish on a summer night, nothing better. In any event, it's Friday. Have a great weekend. Until Monday, take good care.